I was talking to the Director General of the LCCI shortly before you came on, and he was very, very, could just sense his, almost, very disappointed, no doubt. And his main concern as the DG of the LCCI is what this, monetary policy stance means for the small and medium enterprises in the country. They are always said to be the major engine of growth. I mean, if we're talking about jobs, if the average SME cannot get access to credit to expand his business, and which will ultimately mean, getting more hands to work for him, then, the jobs front, will remain bleak. So where can we have a situation where, yes, we can, I know the trade-off is difficult, but where we can just spur growth and have the jobs? Because look, obviously that's the number one priority for government right now. If we can bring down unemployment, at least that's one way Nigerians can say, yes, we are feeling the direct impact of, policies on the part of, those who are running the economy.
I think the first question to ask is this. Who creates jobs? And if we agree that it's the private sector, then clearly we must do everything to put that private sector in a position to be able to create those jobs. I fully agree with what the DG of the Lagos Chamber of Commerce said. Honestly, the interest rate that we operate at this time is going to make it difficult for the private sector to get access to funds.
So obviously we have to look elsewhere. Where else can we look? What else can we do?
There are two issues here. The CBN Act says CBN must take it as its core objective, price stability, which can be translated to mean controlling inflation, and then making sure the foreign exchange is stable. Well, within that band, the central bank has been operating very well on that. I mean, the act was silent on whether the CBN should pursue a lower interest rate and the rest of them. But the CBN also knows that a lot of the monies in the banks are not getting to the private sector. And the central bank governor alluded to that this morning on the CNBC interview. He said the bonds issued by AMCON, about 1 trillion, is going to mature. And when it matures, AMCON is going to now probably swap that with assets. That will limit the amount of credit that will go to the private sector by about that trillion. But the CBN governor is of the view that probably it will not be significant in terms of the negative effect, because a lot of banks, according to him, are already lending to the small and medium scale.
But we hear that all the time.
But the question is, at what price? What is the interest rate at which they are giving that money to these guys? So for me, any way we look at it, driving down interest rates is not negotiable anymore. Our excuse for not driving it down initially was because of the challenge of inflation. Now we are bringing inflation to single digits. We must begin to realize that the economy can live with some inflation so that money can get to where it is supposed to get to. Look, let me tell you what the banks are doing now. They are getting money. They are putting the money in the government securities.
Treasury bills?
Yeah, because it's paying double digits. And when they put it in the government securities, it's not getting to those guys that will create the jobs. And then CBN says there is excess liquidity in circulation. They're also putting it in the foreign exchange market. And then CBN says there is excess money, then mops off again, and the cycle continues. We have to break that cycle at a point. And the way to break that cycle is to begin from this MPR stuff and say, look, let this MPR even reduce by maybe 2 basis points.
But the CBN says, it's going to take more than monetary policy easing to,
monetary policy is one of the first steps to achieve that. Let me tell you, no matter the growth rate, even if Nigeria is growing at 10% today, the man on the street is not going to feel the effect of that 10%. He can only feel it in 4 ways. One, he can feel it when he sees that a lot of the roads around him are being tarred, the rail is springing up, and a lot of other good stuff, infrastructurally. That is one way he can feel it. That one is general. The second way he can feel it is whether there is taxation or his taxes are being reduced. But that's not relevant in Nigeria because we don't tax our people so much. The third way he can feel it is in his own business. Can his business get access to money and be able to expand and be able to drive down costs? It's not only getting access to money in order to probably increase output. Having access to money is also to reduce existing costs of your business. Because if you look at the energy side, which is electricity, it's already paying a lot to power it. I'll give you an example. I'm an example of a small household that is using electricity, the diesel I will buy in a day to consume for 24 hours is equivalent to my PACM bill for 1 month. And this is a fact. I tested it several times, and I've come to that conclusion that the energy bill I will use to power my 40 kVA generator in 1 day is equivalent to 1 month. So if I can have access to PACM electricity, I've already reduced my cost by almost 90-something%. That is what you are saying. And it is when businesses reduce costs that they can make profit. And it is the profit they make that they plow back to their businesses and begin to expand, and they can create jobs. Now, if we don't begin to trend down on interest rates, we are going to have 2 problems. If you move along the way, you see a lot of properties now open to let. People are not taking them. And when these things happen in the economy, they start very slowly and gradually. And you won't notice because we are not very good with data compilation. But by the time we know it, it might have become a crisis. So for me, this interest rate thing, we must address it.
And you're saying that the trade-off will be worth it at the end of the day if we bring down, if the MPC brings down interest rates, and then we see inflation spiking 12, 13, 15% like the CBN governor even predicted for this year. You believe that would be a fair trade-off, or should we cite the Brazilian example where they had that trade-off, and I mean today it's paying out for them?
We should not be too afraid of inflation. That is the truth. And you cannot achieve development without inflation. It's not an act of God. It's a trade-off. It's a sacrifice you make. Would you rather your industries are not getting access to cheap funds, and banks, because of the high interest rates, are putting all their monies in treasuries, in treasury bills and government securities and the rest of them? Would we rather sustain that and achieve single-digit inflation, or look at the other alternative, making funds available to institutions that will use them to create jobs at probably single-digit interest rates, and then banks are now going to be giving money to these government, these private sector people? There will be no attraction in giving money to the government.
Do you think that let me ask you, do you think that there's now a disconnect, as it were, between the managers of the economy and perhaps the man on the street? Because, oftentimes, we hear those managing the economy, brandishing these macroeconomic indices, which they say are positive: inflation, robust reserves, exchange rate stability, financial markets.
No, those things are good.
They are good. But like you said, like you pointed out, at the end of the day, when we have a budget, which is an estimate how we're going to spend, at the end of the day, affect the life of the average man. But it doesn't matter to the common man. That's what I'm saying. So at the end of the day, do all of these things matter? At the end of the day, if the man on the street doesn't feel anything, and we have GDP growth at this, we have robust reserves, we have all these positive, fancy numbers, as they were.
One thing is clear: managing the macro variables to achieve stability and put them under control is very important. And the economic team, they've achieved this substantially. So we must commend them for that. But having done that, there is a monetary part of it that will trickle it down to the average man on the street. But the monetary, they blame the fiscal authorities, because they talk about, we hear things about fiscal expansionary budgets, fiscal spending. They have to work together. They have to work together because both of them are working for the same objective. The fiscal side is working to put the infrastructure, the roads, the rail, and all the other things that government will put in order so that businesses can function properly. So it is also in the positive direction. The monetary phenomenon about this is that the household unit, the individual unit, and the businesses will feel it directly through the monetary phenomenon, which is interest rate is down, the man can have access to money, he can rent a bigger shop, the hairdresser can have access to money, he can get more equipment and do more business. The average man on the street or somebody who is earning income can take mortgages and begin to pay over time instead of paying rent for years and years and there is nothing to show for it. These are the issues. All these things will trickle down to the common man through their access to the financial system. Government is not going to dole out money to people and be dashing them, but the way they will feel the positive effects of government actions, government budgeting, And all these robust macro variables, exchange rate, inflation rate, interest rate, and the rest of them, is when they can feel it in their personal capacities and in their various small-scale businesses.
Okay, let me ask you this, quickly, 1 or 2 minutes. Do you see that happening in this present? I mean, we've come like 2 years. Next week, May 29th, Democracy Day. I mean, definitely policymakers will be taking stock in different sectors, the economy, especially the economy, how it's been since we began this journey 2 years ago. What are your thoughts on that?
I don't think it will happen under Malam Lamido Sanusi. You see, Madam Lamido Sanusi is a risk manager, and he's not going to repent of that and begin to take those kind of excessive risk that we're talking about here. He's going to be very moderate in the kind of risk he will expose the economy to, because he's very interested in the stability and he wants to consolidate on it. Yeah, we must give it to him. He has tried his best, in fairness. A new CBN sheriff will come to town soon at the expiration of the tenure of the... And these are the kind of engagements we need to be having with regards to the people in the parliament who are going to screen him or her and approve. Those are the kind of questions we're going to be asking. Is it an act of God that countries can achieve 2%, 3%, 1% interest rate, side by side a single-digit inflation? Is it by act of God? No, it's not. It's by careful economic management. It's by careful fiscal policies. It's by careful investments in so many things in your human capital, in your financial capital, and in your fiscal capital. It's not an act of God. So all these stabilities, I know it's difficult at this stage because the economy is not very productive. The infrastructure. Because
that's all because when you ask why are the policymakers there in the first place, why are the managers of the economy there in the first place, you've said yes, they're doing their best, they've been able to achieve macroeconomic stability. But if at the end of the day it doesn't trickle down to the man on the street,
that's the transition I talked about earlier.
What's the point?
Having achieved stability. Look, we achieved cleanup under the first stanza of Okonjo-Iweala. It cleaned up, the whole system became more transparent. We get information, even we get in the papers how much is being given to everybody. But do you believe we could
have done more? Yes, I know they had time constraints. There's been a lot of rot over the years, infrastructure decay.
And they've cleaned that up.
They've cleaned that up.
We must commend them for that. They've now moved to the level of stability. They stabilized a lot of the macro variables. We must also commend them for that.
So it's a slow, painful process as it were that we must go through until we can begin to see the jumps.
Yeah, that is why about 4 or 5 months ago, we started advocating for a downward trend in interest rates. The issue is this. We could not have said that earlier when inflation was running away. So you must give the CBN the flexibility to be able to arrest some of those things that were misbehaving. And having achieved them, then gradually we must begin to trickle them down to the ordinary man in the street. And the only way is a monetary phenomenon. That's what I said. So if the economic team begins to look in that direction, it is possible.
As the next phase, or
as the next phase of the transition, which is inevitable. We just must do it. Otherwise, we will not get this job creation that we talk about every time. The U-win is not going to create plenty of jobs, but it is the private sector that creates. And you see, a rising tide will lift all ships. So interest rate goes down, infrastructure continues to improve, electricity continues to improve, then you see things springing up. Government will not even know what is happening. And government will benefit from it at the end of the day because as businesses do well, higher taxes comes to government and it has more money and all these things can continue to roll. That's how economics work.
No, Wale, thank you so much. We're going to have to leave it there. I wish we had more time to continue with this, but it's obviously an ongoing conversation, especially next month or next week when we have that Democracy Day, when we will begin to take stock of where we were